What's going on?
Hey, what is happening, y'all? Thank you for joining us on this lovely Thursday evening. Texan Ads here with you, looking at your BTC crypto Forex updates. If you do like what we're sharing and you're picking up what we're putting down, be sure to hit that subscribe link and visit us over at unitytradinggroup.com for all our guides and indicators and all the things that we share here in the markets. Say hello to Ralph barking in the background there, playing himself with his toy bone and waiting for me to throw a conch. BTC ads. What's going on with Bitcoin? A bit of a retracement from that top supply zone, which we spoke about being a pretty significant level, almost a bang on to the buck there on that supply zone. Bit of a pullback now, and we're kind of where we were back at sort of the scene, I suppose, as we like to say, a little bit before we had that last move here. Broken out or broken down slightly of this broadening descending wedge that we were talking about. And on Tuesday night, we spoke about this sort of formation where we might end up continuing back up to that supply zone. Looks like we're kind of respecting this at the moment, but I think the next sort of 24 hours will be a little bit telling to see if we can manage this level or if we head back down towards this bottom demand zone.
That level that we spoke about, not only last night during our update and our live session, that we identified on a daily time frame, that was from around 2017, roughly there, was the level that I was looking towards, Monday, Tuesday, and yesterday also. And, I did mention during those sessions during the week that more than likely, or there is a possibility that we'll break to the upside and retest that level. I haven't had the same sort of mentality that we might continue to the upside, quite heavily from here, because there's a little bit of a difference in the way of just breaking this level here and pushing up to that 13.8, and then pushing through that level of 13.8 and up towards 14 and beyond. The reason being is there's a whole lot of indicators for us on the daily time frame, primarily to say that we were probably going to be held up quite significantly here at 13.8. And, obviously one of them is Steamroller with that monumentous overbought condition with our sell dot there, with our red dot to say that this is well and truly the top of this move, and it played out quite nicely. But not only that, we did have a big bearish divergence forming on the CCI. RSI was quite high at that 80, 82, 83 level, so quite above that 70 band. And then not only this, we had this level of supply at the same time. And then we did look at the COT indicator, Ty. I think it was Tuesday night, the CME, what it really, the indicator that tells you if this run has been primarily retail, professional, or institutional driven. And we were very, very very fortunate to have something like that, and we were seeing that retail is the main culprit of this move, pretty much from around the 10,000 all the way up to the 13.8 level. And that's to me, and this is my personal opinion, to me that's not sustainable in the sense of relentlessly running to the upside with no pullback scenario at all. So we are seeing this pullback scenario now. We are still quite overbought now, even with this pullback at 13.1 on the daily time frame. But there is some critical levels that Ty did mention just a moment ago that we need to respect, in order to stay around this range, around this 13 to 13.8 level. That range really starts with this 12,800 area and 13K, admittedly, around that level of psychological support. So if we start to drop below 13, and we have broken down below this wedge now, and we have retested it once before, it's not fantastic price action, but we might see some more meaningful price action over the course of this evening and into tomorrow. But if we move down towards this 13 area on the 4-hour time frame, this is high time frame, mind you. If we move towards this 13 and we don't hold this level where we've got some liquidity here to the left-hand side, then we are, we'll pretty confidently move towards that 12.8 and then make an overall decision on if we hold there or move down to that 12.3 level of demand that we have drawn in just underneath there, Ty.
Yeah, and we also, Fergs, if you're watching this, one of our mods in the Discord spoke about the market capitalization as well, the total market cap, where we were prior to having a little bit of a pullback. And we can see that on the 28th, so yesterday or the day before, we had a market cap of almost 410 billion. We're now sitting at 390 billion dollars, or just above 390 billion dollars. So a pretty decent, pretty decent pullback from sort of where we were just a couple of days ago, which I guess indicates a little bit of that selling off from that top supply zone as well. So yeah, the levels that Ad spoke about are pretty relevant. Thursday, what day is it today? Thursday. So yeah, we saw a little bit of that Wednesday night action, that Thursday morning action that we see, that midweek sort of volatility. So it'll be interesting to see what comes as we lead up towards the weekend, Ads.
Absolutely. Look, this level at 13,800, this level of supply that I've had drawn in forever, and if you've been watching us long enough, you'll know that purple level of supply, predates everything I've drawn in this year. So that's been on this chart for a very, very long time, and it hasn't moved since I drew it in. So this level has been relevant for quite some time. So it's going to prove to be the hardest to break. There is a significant amount of liquidity sitting at that area, at this 13.8 area, between 13.8 and 14,200. There is going to be a significant selling volume sitting at this area. That's why we just touched this area. We didn't even close within it. We closed underneath it on both occasions, on both those 4-hour candles before moving to the downside. So it's going to prove to be a very hard level to break if we don't get more volume than this. We need way more volume than this to break through this. It's going to take a lot more buying volume to do that. And we'll speak about some of the correlations between some of the reg markets, that's some price action that's been happening on some of the reg markets, and how that correlates within BTC a little bit later. But honestly, it's going to be quite a struggle for BTC to get through 13.8 in the way, in my eyes, since this level's been on the cards since Jan 2018, and we've been respected off it quite significantly before, where we had a blow off top on the daily in the way of we touched that 13.8 level, and then the candle closed at 13.1. So that was a very, very significant development that happened last time we were here. And we are seeing somewhat of that now, where we've got the same sort of respected candles again. So it's going to be interesting over the next couple of days. If we're looking at the TA purely on the macro scale of things, this is, the climax of this run, and we can expect it to come, further down towards this, 11.5 level if we were to, complete the market cycle and bring, the steamroller indicator and a lot of the other indicators we look at, back down to the mean for another market cycle to occur. Whether or not that happens is another discussion entirely, but we're looking for, these levels to be respected, which is 13.2, 13.8, 13.2, 13 even. And if that doesn't happen, at least we'll get back to 12.8 and we'll make a decision there. I think your mic's muted, bro.
Yes, it is. I think that wraps it up pretty well. So I would agree with a lot of that. So moving on now, it might be worth having a look at the BTC dominance chart and see what that's telling us before we get into ETH. And I also want to have a look at one of your favorites, XRP, as well, and just Litecoin, the USD pairs, when we get to that in a bit, because some of the USD pairs are heating up a little bit as well.
So the the USD, the BTC dominance market price, or the market cap, or the dominance cap, should I say, is trending in the right direction for a further movement to the upside. However, there is some TA that we can draw on here to give us a little bit of a better indication or a better view on where we can expect this to go. So we have got this broken level of supply here, or supply turn demand. Not really, but we'll call it that for now. And we are we are moving towards this level now. If we do come down and close underneath, this 62.5 BTC market cap, it can trigger a little bit more selling pressure. And what we'll do, we'll draw our fibs in to really give us an indication of where this can really end up from here. So we have reached and broken through the 23.6 level of fibs, and I'll get rid of this supply and we'll just look at the fibs for this example. We are moving towards this 38.2, and most of us know how to use Fibonacci right now. So the next area of interest, the next level that we're looking towards, is the 38.2, which is 62.69. And pending that, the 50 and the 61. So this level at the 6.1 lines up quite nicely with a level of demand there. It is very short term. You can see the pause in the market for a few hours just there before we moved further to the upside. So this is going to be the level to look for. This 62.37% area on the market. On the BTC dominance chart. And more than likely, if we do continue towards the downside, we will see BTC strip the value down and come to the downside as well. On the flip side of that, you'll see some of the BTC pairs have a little bit of relief and move to the upside. So that's what I'm looking towards right now. Not getting too ahead of myself. 38.2 at 62.6. And then, breaking that, we'll probably end up heading down to the 6.1, admittedly anyway, at 62.35. That's what I'm seeing for this.
Yes, sir. I would agree totally with that.
Perfect.
All right, let's have a look at ETHUSD.
So ETHUSD not following in the trend that we've seen BTC follow for the last little bit. We did have a movement to the upside, like we have discussed, in our previous sessions, up to $415 for Ethereum. But since then, we've just been creating lower highs and lower lows, and now, if we don't move to the upside quite convincingly, we'll just print another lower high and move to the downside. We did say in our live session on Tuesday night that we were looking towards that level of demand, and that's been respected quite nicely now. However, this trend that we're seeing on Ethereum USD is quite convincingly to the downside. So if we don't see a number of, a little bit of volume come in, that's why I put the volume back on, because it's just been dismal volume on the BTC, in the Ethereum USD pair. If we don't see any volume come into this market to push us at least, back up to that 400 mark, that psychological resistance, 400 even, then I don't think we're going to see much fireworks occur on Ethereum at all, Ty, to be honest with you. It's not looking great to me.
Yeah, and I think it's a very good time to err on the side of caution and be patient with ETH, because we can see, in the past how ETH has had good runs. So it certainly is for anyone that may have missed an opportunity to get into ETH at some stage, whether it be this year or in the last little bit. It's a good time for them to be watching Ethereum and potentially have a few more opportunities that might arise for you. So be patient, keep watching. Maybe right now is not the best time to jump into ETH, but I want to see what happens around the sort of low 380s, maybe mid 370 level. And then I've still got buys set down to around 360 at the moment from sort of where we were ranging between that. I guess that's sort of that 390 level and 360 we were ranging in there for a little bit, as we had done a little bit earlier in the year in September, and then sort of semi again what we saw towards the early part of October. So could be establishing a little bit more of a range there, but I don't think you can go wrong, I wouldn't say betting on Ethereum, but I don't think you can go wrong having Ethereum on your watch list for some potential accumulation.
I agree. And, on the topic of 370, I've just brought it up to the daily time frame, as you probably already saw, drawn my Fibonacci from swing high to swing low, and we were, ranging up or pushing up towards that 61.8 fib retracement. So using the fibs pretty much perfectly there, looking for that 420 mark, and using our tools in our arsenal to really confirm that, which is Steamroller. We just had that touch on overbought on Steamroller with another bearish divergence forming along that CCI. So if we were to be looking towards a critical or key level for Ethereum, because we are starting to turn down on the Steamroller indicator as we are, coming up to that 50 median area on the RSI on the daily, I'd be looking, quite confidently, to be honest, towards that 380 mark again, where we bounced off yesterday, I believe it is, or earlier today on the 4-hour chart. But pending that break, I'd be moving, yes, like you said, towards that 370 area, which is around this pivot or this liquidity area here where we bounced off and created some market structure there and liquidity there. And that's what I'd be looking for on the daily time frame, at least until we can get some more volume into this, because the volume's just been disgusting.
Disgusting.
For Ethereum, it has been. We've had good volume on BTC. Ethereum usually moves in the same sort of fashion, not exactly, but the same sort of fashion, and the same sort of volume amounts we see on both. Obviously, Ethereum is much lower in the way of volume, and that's to be expected. But nothing like this, man. This has just been unbelievable.
Yeah, and I'm just looking at if we bang on Unimoku and even maybe our MA fan as well, there's a little bit of confluence there between some of the indicators and those demand zones that we've spoken about. So that's using the crypto settings with Ethereum. On the I guess the higher time frames, I will often use and I've backtested a number of coins using different Ichimoku settings, and Ethereum does tend to like the crypto settings to a degree on the high time frames, at least. So we can see that we've got a little bit of Kumo support with Ethereum there, and also a little bit of support there with our 50 MA, which lines up with that demand zone. So that lines up pretty well with some of the areas of relevance that we spoke about a moment ago. And if we do, just one interesting thing as well, I'm not putting a ton of weight on it at the moment, but that 354 area that I spoke about that has been pretty relevant in the past, if we go and put on our standard settings on Unimoku, and I don't say this to confuse anyone. Do your own backtesting strategies and whatever it is that you feel is right for your sort of strategy. Lines up there for a potential edge-to-edge trade. So I think those demand zones that Ads has lined up here are pretty bloody relevant when you look at it from an Ichimoku standpoint and also an MA standpoint, and also Fibonacci standpoint as well. So you've got confluence there across a number of indicators, a number of forms of TA being your supply and demand and your EMA EMA lines. So yeah, definitely something to note there. I think if you're looking for some pretty damn good TA on Ethereum, I think what Ads has there on his chart is pretty bloody valid.
Thanks, bro.
All right, one thing I do want to have a look at is XRP USD. Lots to talk about XRP at the moment. All the usual suspects talking about XRP and why aren't you accumulating and whatever. I don't really have too much of a bias on it at the moment. Looks like we're stuck in a bit of a range as our fibs and our demand level, our supply zone up there would tell us. But what are you seeing on XRP USD at the moment?
XRP USD, admittedly, I haven't charted in quite some time because we haven't been looking at it on live sessions or anything like that. But I will chart it right now, and I will draw in, the most relevant levels. A little bit tricky with a lot of price action here. I'd probably choose this one, to be completely honest. I'd probably take it up to there. So using the bottom of this candle here, and then I'm using the retest just to the right hand side to gauge how big this level should be. On this 4-hour time frame, just taking it down to this 4-hour time frame, we could get to 24 cents ish, 24.160, which isn't too far away, very achievable. And that would push Steamroller into that oversold condition as well. And we might see some movement to the upside just to give us some relief if this trend is to continue. So what I'm saying is we could have that lower low here. And then this area here could be our next high low, or even all the way up to this area here could be a next higher low. So something along the lines of that, or even this. And we'll have a look at the daily time frame to really see what level we're at. So yeah, we do have plenty of room to range back down to the downside in XRP. So we could have this trend continue that we're seeing on the 4 hour forming now. And if we have this level, whoops, let me go back. If we have, I wish I had an eraser tool. If we have this play out here, so for that sort of retrace on XRP.
Can we just acknowledge how awesome Steamroller is on the 4 hour on this pair?
I love it so much. I love it so much. But if we do have that retrace all the way back up to that level of supply there to give us our further lower high, which is continuing obviously with the trend, we could see this continue down further and retest some of the levels or some of the liquidity that we have it down at 23 cents. But that's the long-winded, or, that's the longer macro scale, I guess, trend that I'm really seeing on XRP. Immediately, however, like I said, where we could very much so head down to this 24,140, 24,150 level of demand and make a decision based on the volume and the market structure we get there. More than likely we'll have some sort of respected candles from this area, and we will see another lower high if we don't create new market structure after that bounce.
Yeah, I've got some alerts set around 24, low 24 cents, just to sort of touch base and see where XRP is at. We can see it was, if we go back down to the 4 hour where you are now, it was in a pretty nice little range there, and that demand zone looks pretty relevant to me. So certainly going to set some alerts around there and hope for a potential bounce from that region. And I think from that period there, it would satisfy some of our oversold conditions, at least on Steamroller, and by looks of it would be very close to that, in which we would see RSI and CCI coming down to those relevant levels again.
No worries. Yeah, that's exactly what I'm saying, to be honest. This level of demand here, it's extremely tricky to draw, and it's extremely tricky to find and get right. So if you do attempt, very tricky ones or very hard ones like this, don't be afraid to ask in the Discord. Yeah, we're always there. We're always willing to help. So if you have any questions about, this trading strategy, or even, attempting to draw it yourself, please make it known in the Discord, and we will help you out as much as we can.
All right, another one I want to have another look at very quickly before we get into the reg stuff, the LTC USD.
LTC USD. I'm going to have to type that one in. I'll look at the Coinbase chart. As you probably already tell, I haven't charted this in quite some time either, but I will draw the relevant levels in. That's a very easy one to find using the red candle with a lot of the bounces to the right hand side, and honestly very confidently moving towards that level. I think that's going to be the scene of the crime, where we started this movement to the upside, and we are seeing that same sort of trend that we're seeing on Ethereum play out on LTC, although not as clear in the way of a full-on downtrend on the 4 hour, but we are starting to see more downside on LTC as we, instead of it following suit like BTC. But honestly, moving towards this area of liquidity here, like we've bounced off once before, but I think this is going to be more convincing to me at 53.50. What do you reckon, bro?
Well, I haven't even charted it myself. I was just watching to see what you were saying, to be honest. So, thank you. Ching. So, no, the LTC is another one where, again, people are starting to talk about it. We see the USD pair tend to have a little bit of a mimic of BTC when it does run. It's almost like the lagging sort of asset behind BTC. XRP and LTC are typically the ones that I watch beyond death when BTC has these runs. Sometimes when people pull out of BTC, the money will trickle over onto those sort of lower cap USD pairs, and that's what I've been sort of waiting for on LTC. So being patient with that, and just seeing what happens over the next couple of weeks. A lot of eyes and a lot of interest are on BTC. So my attention to other pairs is not great at the moment, but I think I would agree with pretty much there. I've got indicators or sort of alerts set from around $52 down to sort of $50, just to see what happens around that region to wake me up and start paying attention to it.
Very good, man. Very good. Being proactive. I like it.
Yes. All right, let's get into the reg market stuff. Of course, everything that we look at here in the reg markets is just opinion. It is not financial advice. Talk to your financial advisor if you would like more information.
So some good price action over the last little bit on the DXY. Some very nice price action. We've had a decent move to the upside, been respecting TA quite nicely. We've had some moves through supply, and that of course occurred or caused the movement to the next one. We have had some decent price action through this one. So the next area we'd be looking for would be around this area here, this 93.74 or even this 93.80 for the DXY. Now, this is the part where I wanted to have a chat about what could occur with the DXY moving to the upside. We know that crypto as a whole, or BTC, more importantly, is paired against USD. That's the main pair, BTC, USD. We know that. If we're going to see the DXY run to the upside, and even go as far as 93.74 or even 93.8, where we've got that level of supply, it will drag BTC down the other side. That's how this market works. If you have the index moving to the upside, the USD index moving to the upside in strength, then anything that's paired against it is going to decrease in value, because the other pair that it's paired against is moving up in value. It's just going to be a push-pull type of scenario. The exact same thing we see on Euro USD, where the DXY is moving to the upside and then the pair is moving to the downside. And Euro USD, as we know, is a trillion dollar market, even tens of $1 trillion market. So the same can occur with BTC, and we'll see this occur more and more so as BTC accumulates in market cap. As the market cap grows, you will see this happen more and more. Because there's such the low market cap of cryptocurrency as a whole, and then that slice of the market cap is BTC as well. Admittedly, 65% of the market cap is BTC. As the market cap grows, so as we see BTC move towards a 500 billion to $1 trillion market, we'll see this chart become more and more relevant, as it has on the major pairs on Forex. That's just going to be the way it goes, because the two currencies that you're looking for BTC to go up, and then you're looking at the dollar to be dragged down. One results in the other. Not exactly. It's not going to be exactly the same as Euro USD. However, it's going to be closely correlated, and you should keep it on your radar. If you're not charting the DXY, chart the DXY. Have a look at the correlation between the two markets, and make sure you keep it on your radar. Put it in your watch list and chart it every day, or even follow our updates, our nightly or evening updates that we post, because I do look at this on a daily basis. But looking forward from here, we are seeing steamroller on the overbought condition, excuse me. So it does make sense to get some form of retrace to the downside before we see any movements to the upside. So what I'm looking for a couple of levels, and some of these are, or one of these are support instead of a supply. But I'm looking at this level here. I probably should change the color. So 93.23 is the area that I'm looking towards for maybe a retrace towards the downside to cool off some of these indicators before we continue this movement to the upside. So the movement to the upside is good because we've had the higher highs, as we've demonstrated, and we've had the higher lows. Okay, so the movement is happening quite nicely. I do expect this to come a little bit further down towards the negative 27 or even that 93.23 area, to give these indicators a little bit more breathing room before we can go and try and attempt at that 93.74 or 93.8. That's for the DXY. Another one I want to look at today is relevant to all of us that live in Australia, is really the All Ordinaries. So we've been following this level of supply for quite some time, and I've said this over the last couple of nights that we've looked at this. And it's nice to see that it's moving in the way that we did say. So if you haven't watched the updates on the All Lords, go back. I trust that you go back and have a look and see what we said. But this 61.8, 61.39 would be the level that I'm looking towards in the immediate term from this respected level of supply. So moving down from here, this 61 quite nicely. It is a regulated market, so this obviously trading strategy comes from this market. So it is quite respected, and we're looking at that 61.8 now. Coming into the rest of the week, so tomorrow is Friday, so we know the market cuts off from tomorrow. If we do see some more downage, and if we don't respect this 61.8 Fibonacci level, then we're moving quite confidently towards that relevant level of demand at 78.6, and that'll be 6063 for the All Ordinaries market. So if you're looking at the stock market as a whole, make sure you take this into consideration where you're using the All Ordinaries to form your bias on the market as a whole. There's obviously going to be penny stocks and low cap stocks that don't care about what the All Ordinaries are doing. However, we're looking towards the high cap stock, the blue chip stuff, to be faring the same way as the All Ordinary. So moving to the downside quite confidently and looking for this 61.8 fib level to be respected. The last one I'll look at tonight is the SPX 500. Okay, this is the movement. This is the all-time high. That level of supply that it formed on the all-time high. So this is for the US guys that are watching, and we did have that respected daily candle a number of days ago. I think it was last week now, on the 13th of October. So just over 1 week ago now, and we have been moving to the downside ever since. And that's where we're finding the All Ordinaries, getting its momentum from, and following that trend to the downside. With the SPX, however, looking at this level of demand now, we've bounced off it once before, and if we do get a double bottom scenario, we could move back to the upside around to this 3480 area. All right, that would be the most relevant level of supply, although short term, to the right hand side there. But honestly, the way that the markets are going, the way that the way that the markets are going, the way that the global financial situation is, continuing in this trajectory, then we could see more downside. So just keep that in mind. Keep the global financial situation in mind, and we know things don't go up in recessions. So we haven't had a full-blown recession situation happen on these charts or in these markets yet. There's been a lot of stimulus money going into these markets, propping these up, pushing these up, and giving everyone a false sense of security. So this is not financial advice. This is just our observations. But recessions don't go up usually. Look at the last recession. So I'll conclude the regulated analysis with that, Ty.
Lovely done, mate. One thing that I do want to just share, or get you to share, is just the call that you made on Zip going back a little while ago. For those of you who don't follow UTG on TradingView, there was a Zip chart that you posted back on, I want to say it was the 8th of October, where we spoke about that right shoulder. If you play that out, it was bang on the money. So if you were a part of our Discord, if you are a part of our TradingView account, you would have seen that. But just I wanted to highlight that because I just saw that someone commented on it, man, and give you kudos for that, because that was a killer call coming back down to that demand zone. And I know Zip is one that you talk about quite a fair bit. And obviously the accuracy of Steamroller was stupid on that one as well. So great call, man. I want to give you props for that one.
Thank you, sir. It's something that I follow quite regularly. If you want to know more about, some of these stuff that we look at in terms of stock, you can have a look at the stock channel in the Discord. But Zip's been really riding on the wall because we've been seeing a lot of sentiment over the course of, the last couple of months, where people think it was going to the moon. The same sort of thing that you see on BTC when it has parabolic runs. We're going to the moon. But honestly, does the TA really support that? Does the smart money really support that? No, it doesn't. And we've got a very, very easily identified left shoulder, head, right shoulder on Zip. So it was a nice, easy one. The only thing I had to really identify was the relevant level of demand there, which was at 562. And then the rest came quite easily. So very, very easy one to look for. And honestly, like I said, this trading strategy that we do employ, and I'm more referring to supply and demand and fibs and, Steamroller and everything like that. It comes from stock. Forex comes from regulated markets. So it works really well with that. And, and this is another testament to that. So thank you, sir. I think you're muted, bro.
Oh, yes, I gotta learn to unmute myself. Thank you very much, everyone, for joining us. We'll see you in the next update. Take care, everyone.
Yes, you will. Catch you then.
Bye.